Welcome to the Humble Investor Bull Bear Market Report. My name is Adam Straseske. If you want to grow your IRA, your 401k, or your stock account, I can help. Here's some important disclosures. And here's our agenda. We're going to go over the barometer and some additional broad market readings, and then get into this week's operating plan, the current indexes closed, and some possible indexes. So here's the barometer. So we've essentially added up the technical and fundamental things that we look at to determine whether we should be in a risk-on stance, meaning we want to be buying the market, or if we should be a little bit more conservative. And right now, the bull market force is pretty strong here. You know, we're still in a bull market, and so that tells us that risk is on, even though it's a little bit weaker than it was last week, but still looks good. Here's a look at the 12-month momentum, and you can see the S&P 500 is still greatly outpacing the MSCI All World ex-USA Index, and both of them are way ahead of Treasuries. So until we get below here, that is going to have this reading has a big influence on the bull bear market risk. So looks good right now for the bulls. Correction risk, a little bit different. We're in overbought territory. You can see each time we've got on the longer term indicator, our oscillator, we've had a pullback in the market each time it's got up here. And so we'll see if we get a pullback, or if in fact we do see a nice bounce off of the support that we've got here from this most recent tighter trading range. Here's a look at the S&P 500. You can see that we're still in this triangle. We broke down through this trend line, down 0.54% for the week. Bulls couldn't quite pull it off this week. They had a chance to close it higher. It would have been better for the bulls if they could have done that. And so what we're really looking for is to see if this is the continuation of a leg higher, or if in fact we do turn to the downside here, which more than likely, if that is the case, then we're going to look for at least a test down to these lows in the 2600 level. Here's our operating plan and our current indices that we like. We still like preferreds. We're going to rotate out of U.S. large cap and get into small caps this week, and then we still like U.S. growth. And here's a look at all our swing positions, and then nothing for the scalp right now. And here's a look at the U.S. small cap and U.S. growth on a chart. You can see that we were going sideways, 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 and then last week we had a nice bull breakout, up 1.59%. So it looks pretty good for small caps. See if it can hold, and we'll rotate into those from our large cap position. And then here's U.S. growth. Still looks good. You can see the trend line we've got here, still in an upward trend. And here's a look at oil, up 0.95% for the week. Commodities definitely the top performers lately, and so they look pretty good. And here's just a quick look at oil. We've adjusted our stop up here. We've taken some risk off of the table, and this is our fourth time to adjust the stop up on this. So this is a good example of catching a trend and just trying to ride it until we can. Now, if it goes up and it breaks through this top channel line, then we'll look at taking some profits there. U.S. Treasuries down 1.36% for the week. You know, it doesn't look good for Treasuries. The only reason I'm showing this is because the actual vehicle that we trade in is still within the trading range. And if it does break to the downside, then we'll look at getting out. Australia up 0.06% for the week. A weak continuation bar, but we'll take it. And we have adjusted the stop up on this one as well, taking some risk off of the table. Brazil down over 6% for the week. And I don't know if this is exhaustive right here. Hopefully this is an exhaustive move. It doesn't hit our stop and we see a bounce in here. If we can get a nice strong bull bar, it will show that the bulls, if we get a bull breakout, it will show the bulls are in control or have a chance to get back in control again. And so that's really what would look good for the bulls. We don't know if we'll get that. If it does in fact break to the downside again, then we'll look at getting out. Here's the MSCI EAFE down 8.8% for the week. You know, bear bar, we just can't seem to get going. Really would have liked to see another bull bar for this leg. It looks like we might be starting another leg down. It's stuck within this trading range. couldn't quite break to the upside. We've got a second purchase range in here, but frankly, I don't know if we'll adjust the stop up prior to then. If we do see a bunch of bear bars forming, then we'll probably get out before then. And here's our operating plan for the week. For the monthly trender, we're going to switch from large cap to small caps. And the weekly swing, we're going to look at adding the healthcare index if we get a buy trigger here. Here's a look at the healthcare index. Nice bull bar a couple weeks ago. We had basically a neutral continuation bar this past week. And so we'll see if we can get a break to the upside. If the market does continue to the upside, the healthcare does make sense both fundamentally and technically to get involved. So we got a buy trigger here and then a second purchase range down here at the bottom of this larger trading range. And then, of course, just below there, we've got our original stop. And that's it. So with that, have a great week, and we'll talk to you next time.